So it's a pleasure to be here, and it's our third Decoded from the POLIMEC team. 2 years ago, it was the first Decoded we were able to attend as purely attendees. We started POLIMEC very early on, came to the ecosystem, got to know other projects, tried to connect, learn the space, and learn the market needs. Where is a demand and what is required in the space? Last year, it was our second Decoded, and it was the first time we were able to show a little demo of how the product is going to look. And this year, we're gladly here talking about our live product and what we offer in the ecosystem, what are we currently focusing on, what are we doing, and most importantly, where we're heading. Now, having said that, what is POLIMEC? Redefining the Web3 fundraising is very, very broad. It can be summarized of what we do for you. And it's basically three things. If you're a project, at one stage you will need to raise funds. When you need to raise funds, it's not all about capital, it's about where does the capital come from and how long are they invested in your project, how can they deliver additional value. As a participant, you want to find the best projects overall, so you want to get very early access in the Web3 space in a very broad and diversified project market that you can invest in. So what we do in POLIMEC is we aggregate three main stakeholders, which are the participants, so the investors, the projects that are raising funds, and of course a protocol that connects the two with monetary incentives and does the settlement in the background. What that means specifically, very quickly to look, what did we do since last Decoded? And what pillars did we enable very specifically for our journey going forward that we required to build on? First, for the ones that remember, we had the 51st parachain slot that we won in the parachain auction, which enabled us to gather the infrastructure to build our product on. And this secured the underlying technological layer for roughly 2 years to cover all transactional fees for all the participants on a technological product layer. Secondly, of course, with POLIMEC, we launched the TGE. The TGE, the token generation event, is what enables us to go with the functionalities to a live product. In a tokenized environment with monetary incentives, in a blockchain, the token model enables us to transfer value to certain actions with certain participants. This was a prerequisite for all the other things that will come thereafter. Now, the third part is one of the very crucial pillars of where we're diving in going forward, and we call that piece identity. A lot of you know it. It's the KYC credential. It's the DIDs, which we built together in collaboration with the KIL protocol and with Deloitte. That solution is most importantly a solution of how can you make sure that one person is one user in the internet. So with the DIDs, we found a way to eliminate Sybil attacks and to make sure that one user interacts on the blockchain, has one access if you want to limit it to that space. Why that concept will be essential going forward is not only with AI and bots, but in general with the flexibility to have multiple wallets, also in DeFi, you need to bridge the best of both worlds, where you need to have the highest value customer base and you need to guarantee the privacy of the users. So with the concept of the KYC credentials, we were able to ensure that you fully remain synonymous, nobody knows who you are, and nevertheless, you're fully accountable in your actions. What that enabled us is to go one step further, where we did the collaboration together with the Web3 Foundation in a decentralized futures program to kickstart the initiative with the first couple of thousand users to get the free KYC credential and deploy it. Now that was a crucial building stone for the next step, which we called dispenser. Dispenser is a very important concept, and some of you might have heard Gav's talk yesterday as well. Airdrops are by definition, extremely capital inefficient because you cannot limit it to the right target audience and you're basically distributing free money to someone where you get nothing in return. Now, with our dispenser function, we limited the functionality that you can tailor one claim per one DID. And that's a very essential concept in crypto because independent who you are, how many wallets you have, as a project, you do have a possibility of enabling certain functions for a one-time claim for one individual. And one individual is what provides you value and not one wallet, a very important distinction. Now, with the dispenser that we launched, most importantly, we made it possible for not requiring an existential deposit. And that is an essential concept to break up the user barrier, because if you want to onboard new users, you cannot expect them to have a little amount already so that they can claim it literally from scratch. Now, if you put the pieces together, I think you can understand the direction of where our biggest focus was this year and is still going on for the next couple of months, which can be broken down to lowering the entry barriers to get more users and get more projects. So the focus was, how can anyone get a KYC credential? How can we onboard them if they do not have a wallet, if they do not have tokens, and how can we give them access to a platform, to projects that are opening up the capital access to a global audience. With that, we launched the POLIMEC application, and we're diving in of what that directly means. What we talked with the DIDs, the credentials, can be limited down to a verified access. So what is possible? In financial terms, you would call it a private sale. A private sale compared to a public sale is not everyone has access, only the ones have access that actually did a KYC. Very important distinction, they don't have to tell you who you are, they just have to be accountable. And with that, they do remain as synonymous as they are in DeFi, but they get access to additional information. So one of the concepts is the data room, and in the data room, projects can deliver sensitive information, which they tailor to investors that they define who has access to see that information. Most of you in the finance industry know it from fund management, from M&A deals, from private sales, of how you can limit the access to the right audience. That one is the first concept in collaboration with a Big Four company globally to enable a decentralized access to a data room without knowing the end user, because you can trust the verification from a Big Four consulting company, in this regard, Deloitte. Hoppla. The second part of what we just kickstarted are written due diligences. And that's also something we're ramping up in the next month. And written due diligences is the basic concept of, and I had a lot of talks with a couple of you guys in the room as well, how do you invest in a deal? Everyone has an own opinion, if a deal is good, if a deal is bad, they make their own judgments. But before investing, people tend to get a second opinion from a friend. Maybe I'm not that strong on the technical capabilities and I want to ask one of our great devs and they can get a second input and they can be like, I want to spar a concept. Another one might come back and want to get an opinion on the financial side. Another one want to get an opinion on the community growth side. That's a very natural behavior in investing and also happens on the VC front, angel investors. And we can monetize that system by paying rewards to people that deliver the best due diligences, that provide value to other investors and the projects itself, where the investors can give guidance of what they would love to see going forward. Next part is what I talked before with the DIDs and the credentials. You can tailor environments, and to break it down very briefly, you can build up permissioned ecosystems on a permissionless chain. What that means, in our case, for the fundraising part, that every project can define who has access to what I'm going to offer. Is it everyone? Is it certain jurisdictions? Is it certain investor types? And that enables a new kind of economy in DeFi, where you specify the access of the users, and the chain only gives you the possibility that you can build up your ecosystem rules. Last but not least, it's the dispenser functionality. Dispenser functionality, touched it before very briefly. For the one that have seen one DID, one claim, and it doesn't work a second time. That's usually what we hear, and they're asking, I would love to have it a second time. Now, that concept is beautiful feedback for us to hear, because it feels very trivial for the end user, and it should be so obvious that if I give you a one-time claim, I can get a one-time claim. In crypto, this was an untouched problem that has not been solved before, because Sybil attacks are not easy to eliminate. So how can I identify you as a human being without you having the possibility to circumvent that? Very easy in airdrop farming, and very easy also to circumvent it. Hence, we ring-fenced it with the KYC capability in Deloitte, so that you don't have to expose yourself. but on-chain we can make sure that one user gets access to one functionality. So what did we focus on our launch and with our application? First part is what we call the evaluation stage. And in the evaluation stage, I use the example now from the Mandala guys, also sitting here in the room, have a talk with them. The evaluation stage is a concept of what do you do when a fundraise starts in the normal traditional world. You do some soft soundings, you talk to angel investors, you get their opinions in, and you start a deal. If you want to scale up in a decentralized way, you need to talk to participants, but you cannot talk to anyone that is in the room, so you offer them what you have to show, which you upload your documents in a private data room, and people have to evaluate the project, which comes with a risk-reward. If they're being right, they get monetarily incentivized in the form of an investment discount if they invest thereafter, and if they're wrong, they can be slashed. The second part is the funding round, where we have Epsilon that just conducted the funding round. On the funding round, all the participants have the access to directly participate in two stages, in the auction round and in the community round. What we did in the funding process is there's the auction round where you can place your bids, and it's a price discovery mechanism. So it's a price finding between the investors. And in the community round, you have a fixed price per user. And that's a very essential part, which I'll come to in a second thereafter. Now, what we've launched so far is what we call an MVP product that enables you a full primary market transition in a decentralized way. So currently, we have a pipeline of 7 live projects and many more to come. At the moment, we have talks with more than 35 projects on top in very individual stages, a lot also from PBA grads that are starting a new business. Most importantly, for the ones that haven't seen it, have a look at the Polkadot forum as well. We just launched a new initiative, the Polkadot Growth Initiative, to boost BD traction in the ecosystem. So what we see is a capital-efficient way for the on-chain treasury to gain upside traction by supporting projects that have enough support from external investors and are deemed a good investment opportunity. And by that definition, should be a good investment opportunity for the on-chain treasury as well. Now, what we're looking forward here is a very essential topic where we're building in the Polkadot ecosystem, and the ecosystem is aggregating value from all projects that are building on top of it. Hence, we need to have as many projects as possible to cover as many different verticals so that the projects are targeting different end-user client bases so that we're as broad as possible for the highest end-user growth. And with that, of course, the topic comes up for competition, and it's very important that we have a lot of competition also in the same verticals to increase efficiency over time. Covering a very important part of what we're scaling up on POLIMEC is collaborations. Collaborations is not just a buzzword and we want to make an announcement. It's collaboration partners that we have signed that want to support the project after their fundraise. So the essential part is we have tokenized incentives to give the best opportunities to the investors and also to help the projects to succeed and maximize their probability of success. That one is not finished after funding round because it just starts with all the deliverables and expectations from the investors. Now, with our collaboration partners, we can reduce their infrastructure costs, we can help them to hire people, we can give them access to discounted fees on design agencies, we can connect them to potential partners on the exchanges front, on the market makers front, and we can do the right introduction for them to level up in the ecosystem with what we call best-in-class providers. A very essential concept is as a decentralized protocol, we're completely different to an accelerator. So there is no exclusivity agreement, there is no agreement between us and the provider. It's solely the provider wanting to offer it over the protocol because he knows he targets the most efficient client group because they're right off their start after funding round, and to be able to become their partner at that given stage, they have to compete with other providers and hence lower their discount rates to become the best possible offer. Now, what I touched at the very beginning, and it's one of our crucial pillars where we're heading, so far what we focused on with POLIMEC is to enable a protocol that can cover a full funding process on-chain while putting the right monetary incentives for the investors and the projects to build it up. Now, the focus so far has been and will be going forward very simply to lower the entry barriers for more participants, to build up the right incentives to get it to more users, and hence attract more projects. Now, how are we going to do that? We're mainly focusing on 3 areas. The first area is very clearly user experience. Everyone in crypto knows it. Wallet handling is not the best use. And we had long discussions, lots of sparrings with a lot of projects, lots of sparrings with a lot of investors. Everyone that builds in crypto has heard it before. I don't want to buy your token to use your app. It's as simple as that. If you have a great functionality, I want to use it as a user. I don't want to buy your token, I want to use it. So we found a way that we're going to implement of how can end users use the entire POLIMEC protocol by having USDT or USDC and doing what we call a protocol utility borrowing from the on-chain treasury, where actions are happening in the background and PLMCs required for the on-chain functions are done without the end user noticing. This model will be implemented via a ticket fee and is one of the essential steps on our path to a white label solution. The second path is within Web3, we need to expand to different ecosystems because we want to enable access to as many users as possible and to as many projects as possible. And the first step in that path is EVM integration. With the EVM integration, it will be the first step to enable USDT and USDC participation from EVM ecosystems, as well as conducting fundraisers and launching projects on EVM-based chains. Now, if we summarize these 2 steps and what we've built up before, it goes where we actually want to go since the very beginning, which is a white label product. The way where we see how we can scale a product to millions of users, and we hear that often in crypto, is actually to make it available to 1 million of users. And in our case, we've built everything on-chain to specifically enable solutions that can be integrated by other providers. So with the EVM expansion and with the direct stablecoin model, we are there to offer a white label solution, which means if you as an end user log into an exchange account and you open up your exchange account, you will have the possibility to scroll through early stage Web3 deals and you can participate with a participate button. That end user has never seen the POLIMEC protocol. He will never see the POLIMEC protocol, but he has access to something where we offer an additional business stream to financial intermediaries, to brokers, to exchanges, without the end user noticing that the entire settlement is ruled by the protocol in the background. For these integrations to happen, we need to enable a model that is possible with stablecoins, and we need to enable broad market access for EVM-based chains and other protocols that we can conduct funding rounds for. So with that, we're all heads on track to head towards the white label integration and also, in a first step, enable the direct stablecoin model. Now, to ramp it up, I'll try to do a quick summary on POLIMEC. What is different with POLIMEC? I think I talked a lot about primary markets, fundraising, and decentralized protocols. In the end, it boils down very, very simply. We try to reduce all the possible risks for an end users if they do the same process steps compared to what we can build with a code-based system. Now, on our side, that means for investors to be attracted, they need to have no counterparty risk, fast execution, good availability and global access, and obviously an easy user experience. For the projects, it means the benefits have to be high enough. They need to profit from the entire process, and they need to be able to reduce the costs. Now, what we're focusing on with POLIMEC is to make it available for other users in other ecosystems and to broaden the access overall, where we're heading towards a white label solution to go also beyond Web3 users and offer it to the Web2 world. With that, I want to close it very, very simply. We always get asked what our path is. Internally, we had a lot of discussions on that path as well. Now, at the moment, our first product is out. What we mean with first product is enabling fundraising on-chain. It's a financial market settlement layer, a lot of complicated words. It's, very simply put, a permissionless chain that enables permissioned ecosystems. And by that, going forward, we enable the projects more functionalities to tailor it at their wishes, and the end users a seamless, easy flow to get access in various early-stage Web3 projects. By that, thank you all very much, and in case there's a question, feel free to shoot. Thank you.
Micro. And I can see here a lot of people from POLIMEC, so let's go to hear the people, please. Some questions?
Hello, very nice presentation. I just have some simple questions. Is it available for retail investors? And with which token can you invest for the early stages project? Thank you.
So the protocol is open to all investor types, and the projects define who can invest in a deal. How it's structured is that retail, professional, and institutional investors can invest in a project. So there is the access for everyone given, and the individual projects can define up to what is the maximum amount, so everyone has access. The second part, as of now, you can invest with USDT or USDC, as well as DOT natively. Perfect.
All right, another question? Maybe from some ambassadors or something like that? Right, look, I have a question for you. And it is generating a lot of benefits for new projects that want to grow in Web3. Is it it has some relation with digital identity, or why is important this new way to raise funds?
So if I understood your question correctly, is why are DIDs required, and what's the benefit of having a decentralized way of raising funds?
Yeah, exactly, man.
So I think on the DID part, it's the obvious thing that if you want to have longevity in the business and proper business continuity, you do need it, because all the other ecosystems, without naming the names, have all the same problems. If you build up a launchpad where I enable the access for everyone without KYC, then the projects have huge problems 1 or 2 years thereafter, which they don't face immediately, but will be penalized in their journey. They cannot open a bank account, they will have problems in their journey, they have to do re-KYC, but they can't do it. So very simply put, how the banking industry is structured, you will not get around if you want to become a successful large project without having KYC'd your users. What we did is we found a way that you don't need to know every single user, but you can assure that they are KYC'd accordingly. With POLIMEC, to having it as a decentralized protocol enables us to give, from the very get-go, a global access without any costs. There are no participation fees for the users, and we can broaden up directly a globally diverse user base.
So I know that you are ready to deploy all this magic. How are you doing to manage all the nervous, all the projects that they are saying, hey, I want to get in, I want to begin with POLIMEC. I don't know if you can say how many projects there are in the wait list, but please share some signals about that.
We'll happily do. So I think as of now, what I can publicly share is we have 7 projects at the moment on POLIMEC. We do have public.
All right.
And we also have discussions with roughly, I think, a little bit more than 35 projects at the moment ongoingly, in also very different stages. So a lot of them are coming from the PBA grads, and usually in 6-month circles, you have a lot of founders that are starting a new project that we try to guide and also support and get them ready until they're at their first fundraising stage. So there are different cohorts and different project levels that we currently see. On our side, we expect roughly 15 to 20 projects that will raise within the next 9 to maximum 12 months, and potentially even more of what we can offer to the investors within the Polkadot ecosystem, and even more in the EVM ecosystem as well.
And for example, in this moment, you have some specific roles that projects can apply, or are you trying to doing adjustment with these roles, thinking about requisites to participate?
I'm not sure I understood the question. The roles for projects to apply?
Yeah. To apply to receive fundraising.
Okay, so if I understood it correctly, the requirements for a project to apply is basically that they have a legal incorporation, that they did a KYB at Deloitte, and that the UBOs, the owners of the legal entity, are KYC'd. Long story short, the company and the founders are accountable, nothing else. The rest is, of course, all the documents that they want to upload, they are in charge of. They don't have to do it, but they obviously increase their odds to be more transparent with the investors and to show their investment case as well. So from the requirements on our side, this is purely on-chain logic, and it requires the KYB credential of the entity.
All right, all right. And thinking about the impact that it will to generate to the ecosystem, how do you feel with that? Because you are open opportunities, you are open doors to new opportunities, to new projects, especially for be ready to deployment, for go to production, or receive this support that is really important. How do you feel about that?
Fully agree. I think the Polkadot tech is stellar to be used, I would dare to say, more often in the direction of a white label solution, so that we have more applications where end users do not require to use a wallet, so that we can target more users in the broader user base. And this is where we see a big value add and the leverage that can be done compared to using complex blockchain technology with wallets. And I think this could be the biggest target where we're putting the focus on to get Web2 users the access to the protocol.
And can you share some words, reflection with the community that is connected online or something, maybe beta information about POLIMEC, please?
We cannot share yet where we will do the white label integration, but certainly will be crypto players. So it could potentially be crypto exchanges or brokers or financial intermediaries, so that the end user base is already the right target audience to be interested to participate in these early stage deals.
All right. Thank you so much, Luca. Let me help you with that. Please applauses, Luca.
Okay. Thank you.